Yeah, here we have an example of live zone trading. And what we did in this particular case, let's look at the strategy setup. And you'll notice how we have things arranged. Now I have a couple of different strategies in here just to run a comparison. The strategy that's firing off, we're using, of course, fair value. Today's fair value level is negative 3.56. Trading in both directions, we're using a simple group reversal system with group number 1 and our zones. Now in this case, based upon overnight activity, which was not very volatile, we decided to set up the initial zones, which are found down here, all the way down here. String 1 and 2, ESDPO string 1 and 2 are set to 500. Okay, that's the simple, very simple system. Now the only difference between that and this, you notice this also is using a very simple system, group reversals with the zones. This zone was set to 1100. So first one set to 500, the other set to 1100. And we have different colored signals to identify the distinction. Now, as you know, you will not see a zone on the chart that's plotting the actual strategy results. That's not the way it works. Okay? So instead, all of that's just taken into consideration, and the strategy fires off the trades once we're having a group reversal as well as into that 500 tick bar zone. We had some nice volatility right out of the gate. Up again, short, long trade here, continue to drop a little bit, another trade here, and by the way now, you want to keep in mind we're not putting into account here any kind of stops. We're just simply looking at the results of the trades themselves. You have plenty of opportunity to move a stop should you choose to do so. Now as we get into the rally up in here, now you see some loss based upon the fact that the 500 tick bar zone is no longer adequate. Now we're getting more of a rally. It does pull back, however, a little bit and continues on in its rally, and is currently giving us a couple of short trades. Now here's the results thus far. Strategy performance report is really quite good. Okay, now let's take a look at a slightly different arrangement. During this rally period, all right, if we would have been using a little different approach for this rally, let's look at what could have occurred. Now, whereas in the previous strategy, during this rally we had a few short trades that took place based upon a 500 tick bar zone. In this strategy, we do not see that activity, any kind of short trades, until right in here. Now what was the difference? Here we used a very simple, unfiltered approach. Let's get this right. Okay. We're not using fair value as a filter in this case. Not that we didn't want to. It's just that we didn't want to show you where the trades took place with any other filter but just a simple stochastic approach. Okay? So all that we're doing, notice everything is set to false here. All that we're doing is using a simple dual stochastic approach. And we're using in two charts an 1100 and a 6760 for the short trades. Well, really for any trades. And here's where you have your short trades. Okay? So the stochastic approach eliminated the use of any bands, did not get any false signals as we were moving up, and finally, just after the turn, we had the short trades. Now, where did that go long? Where did it go long? Okay. As we came down here, the stochastics on those two different tick bar intervals did not go long until right in here. Now look at the difference. Now here's your group reversal down here. Alright, it's pretty obvious. But almost two points. 2 points from the low here. She finally goes long. Okay. So here's the cluster of trades in here. And another cluster in here. Okay. And if you're wondering why we didn't try to use a zone approach for any of those trades, here's your 6700 tick bar, and here's where your zone is. Okay, your lower zone here is way below the market. The upper zone could work for an exit, but the lower zone is not good for an entry. So instead, just simply using a stochastic approach, that would allow us a little bit more opportunity to get in. But as you noticed in the previous discussion, that was still late compared to the group reversal system. Stochastic on the long trade was 2 points below or 2 points above the low. So you got to be cautious as to what approach you want to take and have a good idea of where the market is really headed. All right. So, last but not least, just a quick review. This was the overall market activity during the evening, the after-hour market activity. Pretty much just staying within the zone of a 500. So that's why we used that in our initial approach. But as the market became more volatile later on in the morning, then that 500, as you see, isn't really quite enough. You'd have to increase the zones in order to have better results. So we showed you, in this case, a stochastic approach as an option, and that got us out of the trade, the long trade, in a real good spot. A little late on the entry, but in any event profitable. So analyze the situation, make a decision, stick with it, make a decision about how many trades you're going to take, whether you're going to use a profit target or a technical approach for your entries and your exits, or exits in this case, and it's going to be successful for you. So that completes this video.